Assalamualaikum and good day everyone. My name is Ahmad Najib. So today I will be explaining about the sales order. So for the definition, sales order is a commercial document issued by a seller to a customer confirming a sale of goods or service before delivery. It details the quantity, price, and terms of the transaction. For the importance, it acts as legally binding agreement, helps it in inventory management, and prevents misunderstandings regarding pricing or discounts. And as you can see, these are the examples of sales orders. Based on this TikTok shop transaction, a sales order is the initial agreement between the buyer and the seller. Looking at our document, the process begins when the customer Ahmad Najib selects the Mifi sports suit. Key activities here include price calculation and payment confirmation. You'll notice the original subtotal was 16 ringgit and 55 cents, but after applying various vouchers like the TikTok shipping and seller vouchers, the final total was reduced to just 1 cent. Once the payment method via Touch and Go was confirmed, a unique order number was generated. This document is vital because it ensures the seller knows exactly what to pack and what price are agreed upon before the item ever leaves the shops. Moving on, let's take a look at delivery order. For the definition is a document from a consignor or owner of goods that allows the delivery of goods to a third party, which is the customer, and serve as proof that the items have left the warehouse. For the importance, it ensures the correct items reach the correct address and serve as a checklist for the customer to verify the condition of the goods upon arrival. Let's take a look at the example of delivery order. The key activities involve dispatching and tracking. Once the seller order is processed, the item is handed over the carrier, in this case JNT Balung. As seen in the tracking interface, the order progress moves through stages from order place to waiting for courier, and finally in transit. The delivery order contains the essential shipping address in Tawau, Sabah, ensuring the courier knows exactly where to go. Moving on, we have invoice. This is a bill of sale when a company like Apple provides a service like a TikTok promotion. They issue this document to the buyer. It's important to note that an invoice usually implies a credit transaction. It acts a formal request for payment in your books as a buyer. This is a purchase invoice and goes into your purchase journal. As a seller, it's a sales invoice. Key details to look for are the SST or tax breakdown and the unique invoice number, which is essential for tracking the debt until it is paid. For smaller immediate transaction, we use the cash bill or bill to-9. This is a common in retail. In this example, Zahira bought just gamat and cream fit C. The seller applied a RM20 discount and added RM8 ringgit for postage. Because the payment was made instantly, a full invoice wasn't needed. This document is unique because it serves as both the request for money and the proof of payment at the same time. In your accounting exercise, remember, cash bill always goes straight to the cash book, never the credit journals. So next will be the credit note. So what happens when things go wrong? Enter the credit note. Suppose you bought RM 2400 worth of phones but returns in a few because they were faulty. The seller issues a credit note like this one for RM 250 to reduce what you owe. It is called a credit note because the seller is crediting your account in their books to lower your balance. It is the most professional way to handle returns, overcharge, or damaged goods without ever deleting the original invoice. It keeps the audit trail clean and honest. On the flip side, we have the debit note. Think of this as an extra invoice. If a seller realized they accidentally undercharged you on the first bill, they send a debit note to increase the amount you owe. In this Jonas Enterprise example, They are charging for furniture and applying a 10% trade discount. In accounting, a buyer can also send a debit note to a supplier to notify them that they are debiting the supplier's account because they are returning goods. It is the formal way of saying, I'm paying you less because I'm sending this back. Next is the receipt. Unlike an invoice, which asks for money, the receipt confirms that the money has been received. Look at this McDonald's receipt. It shows the exact item bought, the 6% service tax, and most importantly, the cash tendered. This proves that the transaction is closed. In modern accounting, receipts now feature QR codes for LHDN, e-invoicing, linking your spicy chicken burger directly to national tax records. For a business, this is a primary source for the cash book, proving that the cash in drawer matches the sales made. Now, let's take a look inside the office at the payment voucher. Before a company's finance officer clicks send on a bank transfer, they need internal permission. This voucher summarizes the payment like RM230 for payroll and Excel records. The magic of these documents lies in the signatures. By having one person prepare it and another approve it, the company prevents fraud. It ensures that every ringgit leaving the bank account has been verified against an actual service. It is cover page for every check or bank transfer company makes. When it's time to pay a large sum like this massive RM 1.2 million payment, cash isn't an option. The check is a written instruction to your bank to pay a specific person. Notice the two parallel lines at the top. That's a crossing. It means account pays only, making the check useless to a thief because it is only be deposited into the recipient's bank account. At the bottom, you'll see the MICR code which machinists use to process the payment. It is a highly secure, traceable, and legal way to settle major businesses' debts. And finally, we have the internal memo. While usually used for staff announcements, like the Batik Air's update on thumbprint scanners, memos are also internal source documents. In accounting, we use a general voucher memos to record transactions that don't involve cash or external parties. For example, if you want to record the depreciation of your officer computer, or if you need to correct a mistake made in last month's ledger, you write a memo explaining the change. It ensures that every adjustment to the book has a written reason behind it. And there you have it, from the first invoice that creates a debt to the voucher that approves the payment and receipt that confirms the end of the journey. These documents are the heartbeat of business. They protect the company from errors, prevent fraud, and ensure that taxes are paid correctly. The next time you see a receipt or bill, remember, you're not just looking at the paper, you're looking at a vital piece of the accounting puzzle. Thanks for watching.